Hello everyone, and welcome to the July real estate market update. Lots happening over the last month. It's been a bit of a crazy month, a lot of activity on detached particular, and it looks like our market has stabilized. So let's run into the stats, but before I get into them, let's just say welcome to a beautiful summer. Isn't it fantastic here in Vancouver? It's been in the mid-20s. The water temperature is up. We're at like 18, 19 degrees. Did an ocean swim this morning. It's just fabulous. And just talking to friends about our beautiful city, no matter where you travel in the world, when you come back home here and see what we have here, it's no wonder it's one of the nicest cities in the world to live in, and accordingly, to own in. So let's pop right into our July market update and go over the numbers. You can see the stabilization that's taking place now. The sales activity year over year for detached houses was significantly lower last month. Now we're about 5.3% off of last year. The benchmark price from last year, about 3.2% down. That's interesting. And our benchmark price last month, virtually no change on detached houses. Attached townhomes and duplexes, activity is actually up year over year by 3.7%. Benchmark price down about the same, 3% from this time last year. Remember, this is Greater Vancouver. And again, virtually the same pricing. You see that stabilization on that middle range product as well. And apartment condos, we are seeing this. The apartment condos, the strata is pretty much lower than the other product, 16.5% down year over year activity. Prices about the same, 3.2% down, and last month a 1.2% drop. So quite interesting. You can see that stabilization starting to take place. So what's hot and what's not? Let's look into the particular product. As you know, what I use is the sales ratio, the absorption rate into the market, to determine how active a particular product is in a particular area. Now, if that absorption rate shoots past 21%, if 21% of the product is sold in a given month, we are automatically in a seller's market. There's a frenzy, there's multiple offers, etc., and prices are on their way up. If we're between 12 and 20%, we're in a balanced market. It's not favoring the buyers or the sellers. It's very balanced. But if we're below 11% in the sales ratio, we are in what we call a buyer's market. There's downward pressure on pricing, and the market is teetering along, but very slowly. So those are the different gradations I look at on the sales ratio to determine how active each product is. So let's look at detached houses, Vancouver West Side. And if we look at the history, you can see we were in that buyer's market for most of the year, up to last month at 7%. So fairly slow activity overall in the West Side, contrary to what we're experiencing in our office here, which is interesting. And this month you see an uptick. We're at 9%. So you can see that activity notch up by over 20% in activity over the last month in June. Now remember, these are end of month stats for the end of June. So we are still in a buyer's market, but right at the top end of that for detached houses. Condos, townhomes, a little bit of a different story. You can see we were quite active all year in a balanced market, and then we bring up this month and we're the same still at 17%. So it's showing as balanced. However, in the more accurately priced detached houses, we're getting immediate flurry of activity. And on condos, townhomes, they're selling. It's just more of them, more activity overall in that balanced area at 17% balanced market. So let's look at condos, townhomes downtown. Again, we were pretty well at the top end of that buyer's market territory. In May, it was a little bit busier. We're at 11% now, so we're right at the top rung of the buyer's market, just about ready to jump back into that balanced market territory for downtown condos. And if we look at the east side, I was out actually on a tour through the east side on Saturday. We saw some great places, really good value out there. You can see we're right at the top end of the buyer's market for the year. And if we look at where we're at right now, we went from 11% the previous month to 14%. So we actually had a big jump in activity into balanced market territory for houses east side, interestingly enough. So remember, that includes all the price bands. So when we're looking at that sales ratio stat for the west side, it includes the higher end houses like over 3 million, 4 million. That's been a little quieter. Those entry level homes are super hot, under 3 million, tremendous activity. So bear that in mind as well. Condos, townhomes, east side, let's look at that. We were really busy all year in that product category on the east side attached strata. Last month we were at 18%. We are still at 18%, still in the upper end of that balanced market territory. I can see that shooting into a seller's market relatively quickly. If we look at across BC overall, let me get back to that. You can see that activity here when we hit that peak in 2022 after COVID, and then back down again, and we are about here in that balanced market territory, overall sales ratio for BC. So what's happening with prices? If we look at the average price graph since the beginning of time in 1977, you can see houses have been really up and down over the last couple of years, but we're about, on average, Greater Vancouver, BC, overall 10% down, but again, you can see how it's different in each area. Same with townhomes, condos been pretty flat over the last few years. That's the average price graph. If you look at the 5-year trend, so 5 to 10% down, depending on area, product, and price range, that's important. 5-year trend, if you draw a straight line across here along the top, townhomes, houses, and condos, you can see once we hit that peak in 2022, we've had a few peaks and troughs, but pretty consistently close to that peak pricing. So sellers taking advantage of the market today and thinking, oh, we're a couple of percent down. No, don't worry about that. We've had some sales where we've shot up hundreds of thousands of dollars past that. If it's handled correctly and marketed properly and you're dealing with the offers properly, you'll do extremely well. So it's been a great time to sell. Overall, 5 to 10% down if you look at all the sales. So what's happening in the burbs? I didn't break it down into the general suburbs, but basically the more entry level you are, the less expensive detached, super hot. If you go into higher end, quieter. If you go into entry level strata, very busy. Mid-range strata is still a little quiet, but recovering as well. So we're seeing overall all the product coming up in activity. Average MLS residential price, you can see pretty consistently up and down, small movements across BC, no significant change there, but overall we're looking at about that 10% drop for average pricing. What's next? So if we're looking into the rest of the summer and to the fall, what we like to look at is our market drivers, and the ones I'm looking at, consumer confidence is definitely coming back. I wouldn't make it green yet. Everybody's still watching the political situation, the Middle East. We're watching a lot of things. global warming. There's a lot of things that have got people concerned. So consumer confidence is transitioning from red to green, but it's not quite there yet. I think it's coming soon. Inflation in the economy is excellent, and the cost of borrowing, of course, is coming down. So that's green as well, and the inventory levels are stable. So consumer confidence is pretty good right now. Here comes the sun, it's summer, people who are waiting to buy all year are out there buying. Unemployment rate, we're still pretty consistent, seems to be climbing slightly in BC and across the country. Retail sales, of course, are up, people are spending. GDP is recovering nicely. There's no sign of us falling into a recession. We might see a little bit of a softer economy just because of the uncertainty. But overall, we're looking at about that year over year. Residential sales activity is also down about 10% from spring of last year. Rental rates are pretty stable. We're seeing some jumping up, some jumping down. But rents are pretty consistently stable. Commercial activity is actually increasing. There's a lot of activity in ground level retail. There's a big revival going on there. Office product. So commercial is actually increasing significantly. That's always a good sign. And consumer confidence, buyer demand, you can see how that's shooting up as well. Here's the uncertainty we had in those few months. Tariff wars and threats and annexation and all of that going on. Whoa. But look at where we are now. People are getting their confidence back. And of course, we got the new GST program announced back in May. I covered this in my last update, but basically the federal government is encouraging buyers to purchase new product, and they're rebating up to 50 grand for your purchase if you are applicable, and there's various rules around that, which are on our site. If you go to Pospisil Realty Group, into our resource section, I've got all the details there. That's an enhancer to the market as well. Hey, we're a sovereign nation. I love the King's visit. Our Prime Minister is doing, I think, an excellent job in deflating what could have been a very volatile situation with our neighbors to the south. That seems to be going well. Inflation is still behaving. Tiff Macklem is behaving. The consumer price index and inflation are certainly well within and even below that Bank of Canada happiness band. So we're relatively in sync with the neighbors. There's a bit of a divergence happening right now, and we have to watch that because that could result in some inflation. So we have to be careful with that. Not that we have any control, it's the big guys who make that decision. So the cost of borrowing is softening, no dramatic drops, but again, the variable rate mortgages are directly a function of the Bank of Canada overnight rate. And I think at the end of the month, I think July 30th is the next announcement, if Tiff Macklem drops 25 basis points, those variable rates are going to drop as well, and that's going to also fuel more activity for the buyers. That's a good thing. We might even get down to 2% of that overnight rate, which would be amazing. So the variable rates are going to drop. Fixed mortgage rates, again, a little bit more complicated, but they're a function of the economy and the bond yield. So if the economy softens and the bond yields drop, then fixed rates might drop, but only if the bank decides to drop them. So it depends on what the outlook is and the confidence of the bank and what they decide to do. But overall, if we do get a little bit of softening, those fixed rates could drop a little bit further. Probably not a lot. I was hoping they'd get down to 3.5. They're probably not going to. We're hovering around 4.1 now for preferred 5 and 4 year fixed rates. But we might see a little bit of a drop there. So that's that mortgage rate forecast. Hooray! The GDP again is coming back. There's some really good forecasting on that GDP. So that's good news. 5-year fixed rate, you can see where we've come down from, and the variable rate. The projection again is, as we talk about here, that 5-year fixed might have a little bit of a drop, but that variable, again, following that overnight Bank of Canada rate, could drop significantly more. We could get up to 75 basis points by the end of the year. Wouldn't that be awesome? So those mortgage rates are looking really good. The buying power for today's cats, again, quick calculation, I went through this last time, about $527 per 100K borrowed, or $5,270 for every million you're borrowing. Again, it's a quick calc when we're out with buyers looking at homes on what that mortgage is going to cost them depending on the amount they're borrowing. Okay, so a little bit less expensive every month as those rates come down. Oh, this was something I went through last month, which I thought was kind of interesting. A little bit of stats of $2.42 trillion being held by the top 6 banks in Canada, and Desjardins holding 80% of the mortgages in Canada, but they're stable, they're solid. Our banks are not failing, knock on wood, hopefully that will never change, unlike our neighbors to the south, which are a little bit more volatile. You remember the 2007-8 savings and loans crisis. Can be an issue. So, moving on, inventory levels. Let's see what's happening with inventory. Detached houses, west side, nice steady increase, nothing volatile, no drops, but people are coming on the market. We've got lots of clients now taking advantage of where we are because that buyer demand is certainly out there if it's handled correctly. And again, west side, condos, townhomes, nice steady increase in inventory. You can see those sales going up as well, sale price and sales. So that's good news. And east side houses, again, steady increase in inventory. You don't want any dramatic changes in the inventory because supply and demand, of course, will determine pricing. If it jumps up too quickly and demand is constant, we'll see prices fall. So that demand is increasing steadily with the inventory. They're in unison, which is great. East side, strata attached, again, nice consistent build of inventory as we go into the summer. All good news. Active listings building overall across the province. And what's next for prices? Again, if we look at a few things, sold, yeah, lots of happy people. I'll show you a couple of our sales, maybe not a couple, I'll jump into one or two of them, but basically all of the detached we're listing right now selling in great flurry of activity because that uncertainty has now turned into some certainty. People are a little bit more comfortable with our global political economic situation, but not 100% comfortable, but certainly better than where we were. And that's certainly helping us in the activity. And again, looking at those main drivers, mortgage rates, inventory, and consumer demand, the Bank of Canada, again, the projection is we might see 3 more drops this year. If we do, 25 basis points each even, will be 75 basis points. That would be an incredible boost to that buyer demand because people are very dependent on what that borrowed money does cost. So that's a big check mark. Inventory levels climbing steadily. They're not going crazy. That's a big check mark. We're politically stable and we're addressing any tariff threats from our neighbors. They're starting, I'm not a political analyst, but I think they're starting to feel the pinch of us not buying a lot of the US product. And that's not good for their economy. So I think there's a little bit more cooperative environment that we're dealing with there to settle this whole tariff mess that was started in the beginning of the year, not by us, but was, and that's encouraging as well. So even if we get a softening of the economy, slight, that could only mean that those fixed rates might drop a little bit, which again could fuel that market because of such a big pent-up demand we're having. More overnight drops, I just talked about that. The new GST rebate program, that's great. And that pent-up buyer demand, I can't emphasize how important that is. I graph the monthly volumes of the sales in Greater Vancouver, and you can see most years we get that big increase in activity over spring and then it drops down in summer. Well, that didn't happen this spring. So that big area of demand that usually gets satisfied over spring hasn't been, and it's starting to let go now as those rates come down and people are more confident in our global situation. So that pent-up demand is a big factor today. So we're seeing many buyers are out there viewing and purchasing product, and they're also willing to compete. They're a little hesitant, but they are competing. I'll show you an example shortly. So prices have stabilized now, and the buyers, the demand is going to remain strong over the summer, especially for detached houses, a little bit less so on strata product. So that's where we are, and even the Globe and Mail came out a couple weeks ago, and they were talking about this twitch. It twitched its fingers, interesting analogy, of the prices stabilizing and starting to come back. So Canadians are starting to buy across the country. That's good news. I like to look at it like this. The beginning of the year was like a bit of a hurricane, but after a hurricane comes a rainbow. I thought that was cool. I heard that line in a song the other day, and I forget which song it was, but very true. After those turbulent times, the sun comes out, there's usually a rainbow. What a great shot. And that's what's happening here in Vancouver. And here's a good example. Let me tell you about this one sale, at least. We've had a few over the last couple of weeks. 584 West 18th Avenue, just a half block off of Cambie. We sold this restored and renovated Vancouver special. Beautiful home. We had listed it for $2,688,000. Of course, we did the live stream. There's me doing the live stream out there, and it was a fun live stream to do, because we went out on Cambie Street, we looked at all of the neighborhood restaurants, the cafes.
I'm Marty.
I got the volume on it. There I am.
Welcome to another
Talking
live
away. If you haven't seen this,
for
it's kind of cool.
home.
Turn that volume right down. But there I am in front of 584 West 18th, having a great live stream. We went around to the whole neighborhood. We looked at everything near there, the parks, the shops, etc. Guess how many views we had on that live stream? 33,000 people watched that live stream. That's an incredible viewership. We're getting now for detached minimum 20,000 and upwards. I had one last week, was at 56,000 views. That's amazing. Watching me walk through homes, talk about neighborhoods and stuff. People love that. So as a result, the really cool thing is we had over 80 people through that home. And 80 people through the home, after a lot of calling and discussions and answering questions, we actually generated 7 offers, which was really remarkable. And remember that $2,688,000 home, guess what we ended up selling it for in a multiple offer situation? Over $518,000 above list. So don't tell me the market's quiet. There's a great example of an incredible sale that just took place last week. So that's how active our market is. We did the same with 6060 Holland Street. We're doing it right now with 3580 West 17th. So people are buying. There's a big demand. It is active out there. And that is my July market update. You can watch this video on YouTube, Instagram, and on Facebook. And of course, if you'd rather listen to me, put you to sleep, I'm on YouTube Music, Apple Podcasts, and Spotify. I'm Marty Pospisil. Thank you very much for joining me. Have a wonderful summer. Enjoy our beautiful city, the nice weather we're having, our oceans, our trails, running, biking, swimming, paddleboarding, whatever you do. Have a great summer. I'll see you on August 1st.